let's talk about the S&P 500 first, then we'll get into some of the small caps and tech stocks. But first, here's a year-to-date look at what's happening. 4,200 in the index. If you're looking at SPY, it's 4,420. We can see we broke that very recently. What are you seeing in the technicals here? Anything to be concerned about?
Well, what's so interesting coming into today was that the McClellan oscillator, or the market breadth, actually stopped declining while the price continued to, which generally means that the selling may be at this point in time drying up. So that 420 or 4,200 level is important, but you can see if you go back to May and June, we're coming into some support levels, which probably means a bounce. The question is how far? That 417 to 420 level will be the key resistance. It's also, interestingly, a 23-month moving average, which means that whole expansion we saw over that 2-year business cycle, the first half of this year, has now been violated. And so most likely it points to a stagnation rather than maybe the end of the whole market.
All right, so maybe a bounce is in the cards, but I'm telling you, if I look at the Russell 2000, this has simply fallen out of bed, as you heard Diane say, lowest level since basically the Biden election. What are you seeing in the small cap space right now?
Well, yeah, I mean, this is completely contrast to what we just mentioned in the SPY. That doesn't mean it couldn't have a bounce. But looking back, again, zooming out at that monthly situation, I love those monthly charts. This broke down under the 23-month long before the SPY did, number one. Number two is it broke the 80-month. That's a 6 to 7 year business cycle. Typically, that would be a recessionary indicator because it means a real turn down in terms of the business cycle. So, yet it's a monthly, so that means we have some chance maybe of getting back over 170 if we're looking at IWM, but right now that seems like a Herculean task. And if this can't make it, then I would not necessarily stay very positive in anything.
All right, looks like transportation kind of in a similar vein here. I want to skip ahead though to Nvidia actually. We were just talking about this over the break, and we have this this island here, if you want to call it that. It's basically a 3 or 4 month consolidation, but we're at the lower end of this. And if you look real closely and squint, you can see kind of a head and shoulders top as well.
Well, yeah, NVIDIA, of course, would be obviously something that everybody's going to have eyes on to represent the chip industry. And of course, we have some fundamental reasons to be a little bit concerned with China. But just from a technical standpoint, there's also that big gap that you saw on the original chart.
Here we go, right there.
So this is another scary situation in that you're right, head and shoulders top could emerge. And if we start to fill into that gap territory, I do not look at that as a healthy sign. It seems to me that the whole semiconductor growth stock space got a little rich, especially when we just looked at transportation.
A little bit too much hype?
Yeah, too much hype. So yeah, I wouldn't be surprised to see a bigger correction there.
All right, got to hit commodities as well. This is a commodity ETF, tracks the entire space. I'm just wondering, what do you see in here? What do you think about commodities in general?
Well, I have been very bullish for quite some time in commodities. Some of them have been very cooperative in that bullish sentiment, and others have not so much. But DBC really represents the oil and the precious metals. And that's an important area to be looking at right now because of what we're seeing geopolitically. And so with oil as the component of DBC, or if we just wanted to look at DBC, I like around 24.50 to hold. It gets through 25. I think it could scream higher. Oil has to hold $80 a barrel, gets back through 90. I think 110, 130 is realistic. And that's kind of, we're stuck in the range right now.
Yeah, and also want to hit gold because that has shot up recently, quite literally. What do you think of this space? Because if I go out, kind of zoom out to a 5-year view, we're in a very, very sideways consolidation period, but at least at the top of it. Do you see a breakout?
Well, I started out this year thinking that gold could go to 3,000 an ounce. And so I still think that that's very possible, especially given everything that's going on, especially the fact that gold has held up in the face of a stable dollar and higher rates. So there you go. I mean, you're looking at this chart right here. We got through 2000 briefly. We've come down to around 1980. I think this is 2000 to 2050 is really the breakout point. And then what we've seen in gold, and I think this is really important, is that it's been a buy when it looks terrible and it's been a sell when it looks amazing, which means if it continues to go up and buyers come in at the top, then you know it's going parabolic.
A true contrarian trade. Got to hit the other gold. A lot of people are going to take issue with that. Don't write letters. But here's Bitcoin. As I was saying earlier, looks like we finally got that God candle right here. What do you think of the technicals in Bitcoin?
Well, it's spectacular. I mean, again, very commodity-like in that it just behaves beautifully technically. I mean, it took out 28, took out 30, stopping right into some resistance now as we get closer to 35. It looks to me that as long as we hold up over this 30,000 level, 45 to 60,000 is on the table. More importantly, it's now showing, regardless of all of the hype about it, it is showing a separation between what's going on in equities and what's going on in the cryptos. So store of value, mass adoption, you can name reasons, but the charts are good.
Yeah, I focus on the technical. I don't really need a reason here. All right, Coinbase, this is a stock that really got obliterated last year after topping out, I believe, with Bitcoin itself. What do you think of Coinbase? Time to maybe punt a little bit in the stock space?
Well, the range was 70 to 80 for a while. And then last week when the news got out about an ETF for a spot,
Bitcoin, sure.
This thing went to 90, like really fast, and now came all the way back down closer to the 70 level. So it's the new widowmaker in my mind.
Move
More
over
so.
natural gas.
Yeah, oh yeah, natural gas actually behaving. It's just consolidating, getting ready to explode. So I think that Coinbase will benefit, is waiting for more news. Obviously, it's a little bit of a departure from what's happening with the actual Bitcoin itself. But again, this can get through. I like these lines you drew here. We can get through all of this resistance. I think 114 is my first target, really.
All right. Well, we have to leave it there. Really appreciate you stopping by. As always, Michele Schneider. Guys.
Thanks so much for breaking that down. Great analysis there on the charts. All right.